Hello friends, a very warm welcome to all of you. In this video, we'll discuss the auto volume numbers for the month of August 2020. By auto volume numbers, I mean the wholesales. That is the numbers the number of vehicles that were dispatched by companies to their dealerships. So the broad trends that we could see in the month of August were, firstly, that OEMs ramped up production in August 2020 as plants further opened up as compared to the previous months of June and July. Secondly, the OEMs looked to build up inventory at dealerships in preparation for the festive season. This also led to a spurt in volumes in the current month. And thirdly, the lockdown related disruptions reduced, since most of the country, as we know, has opened up, although with some localized restrictions. So now we'll take a look at what were the key trends or the key takeaways that were seen in each of the auto subsegments. Firstly, for two-wheelers. In the case of two-wheelers, the OEMs or the companies, they rushed to fill in inventory. The dealers had inventory ahead of the upcoming festive season, which led to a strong sequential growth, as you can see in the slide, in the table. And what happened is, because of this, even on a YOY basis, the volumes were closer to last year levels. Although for all the companies, they were not as much as last year levels, they still inched closer to the last year levels. And the third trend in case of two-wheelers was that motorcycles fared better than scooters. Now the reason behind that is that scooters are considered to be more of an urban phenomenon, whereas motorcycles are more preferred in the rural areas. Now given that the rural economy is doing better right now, motorcycles quite logically fared better than scooters. So taking a look at each of the companies in the two-wheeler segment. Now firstly, Tvs Motor Company. As you can see that the volumes for the company in the month of August just managed to cross the last year levels. They were almost level. However, scooters declined 20% year on year. Motorcycles were up 10%, whereas mopeds, which are widely used in the rural areas, were up 23%. Secondly, for Hero MotoCorp, which is the largest two-wheeler maker in India as well as in the world, what happened is that the year-on-year growth was about 8%. Now this was led by inventory restocking and production ramp up, which pushed volumes to a greater extent. And volumes are also helped by the launch of its recent launch of its bike, the Xtreme 160R, which happened in the end of June 2020. Thirdly, for Bajaj Auto, the volumes picked up sequentially. If you go to see, the volumes were higher by 35%. Now this happened because there were some production issues that the company had at its Aurangabad plant in the previous month. Now most of those issues have got sorted out and the production has almost normalized. Now the company is also going ahead and filling inventory at dealerships in order to prepare for the festive season. And thirdly, the volumes also were helped by the launch of its new CT100 bike by the end of July 2020. The fourth company, the two-wheeler company, which is Royal Enfield. In case of Royal Enfield, while the year-on-year growth or rather the year-on-year decline was 5%, now this was because the production ramp up for the company is still not up to the mark. Orders continue to be high for Royal Enfield. However, the production is just taking some time to match up. This has resulted in a waiting period of 30 to 40 days. However, we expect that this production will normalize in the coming months. Now the second subsegment that we look at is the three-wheelers. For three-wheelers, there were some broad trends which were seen across all the companies. Now as the numbers in the slide that you can see are already there, and these numbers are showing that if you see the year-on-year figures, they are nowhere close to what they were last year. Now this near-term weakness is expected. This is because that a large part of three-wheelers are used on the passenger side for public transport, and it is quite logical that people will avoid public transport for now. Hence, recovery for the three-wheelers will take place only when the fear and intensity of the current pandemic reduces. Now looking at the largest passenger vehicle company in India, which is Maruti Suzuki, the company reported a strong 17% year-on-year growth and a 15% sequential growth. Now this was led by firstly by the strong rural demand and a cautious preference for personal mobility. like people preferring to have their own vehicles, whether small or big, and instead of public transport. This was also reflected in Maruti Suzuki's mini segment, the segment which has this Wagoner and Alto and so on. This segment grew as much as 95% year on year in the month of August. Alongside the mini segment, even the utility vehicles, the likes of Gypsy, Brezza and so on, they also grew 13%, indicating that premium buying has not totally taken a hit. In fact, if you see the numbers for M&M, it saw a growth of 24% sequentially, and most of this was led by the growth in utility vehicles. Now, the utility vehicle segment has suddenly seen a lot of competitive intensity from the likes of, say, Kia because of their Seltos, Hyundai because of their Creta, and MG because of their Hector, and so on and so forth. So this is one very interesting segment that is evolving. Moving to the commercial vehicle segment. Now, this segment as a whole is struggling, and I would say this segment was struggling even pre-COVID times, and currently it continues to remain sluggish. This is because the fleet operators are still struggling with surplus capacity, and hence there is no capacity or you can say rather willingness to buy new vehicles, new CVs right now. Now, slightly the LCVs, which are the light commercial vehicles, they have fared slightly better than MNHCVs, which are the larger CVs, due to demand from e-commerce players and also due to transportation of agri-produce. However, the sector as a whole is expected to remain sluggish for some months owing to weakness in the overall economy. Now, last but certainly not the least, the tractor segment, which has been the darling of investors for quite some time now, continued to see positive volumes in the month of August. This is because of reasons such as a robust Rabi output, higher procurement by the government, better price realization, above average monsoon that the country has received so far, and higher Kharif sowing. So firstly, escorts within the tractor companies. For this company, if you go to see, the year-on-year growth is 80%, whereas the month-on-month growth is 37%. This sequential growth of 37% happened because the utilization for the company improved from less than 60% in the previous month to near normal levels in August 2020. Escorts did suffer from some supply chain issues in July 20, because of which its volumes had taken a hit, and we expect that with the current month this has got normalized more or less. Also for M&M, the tractor sales showed a 65% year-on-year growth. This was led by a 70% domestic growth. To sum up the entire situation for the month of August, we have finally taken 4 companies which are, you can say, good representative of the sub-segment that they belong to. Firstly, in case of two-wheelers, we have taken the example of Hero because it is more or less a domestic focused company, although their exports are also growing. But in case of two-wheelers led by Hero Motocorp, what has happened is that the volumes have grown higher than the pre-COVID levels. By pre-COVID levels, we have taken the month of Jan 2020. Now, this has happened due to a strong rural focus for the company, the preference for personal mobility, a production ramp up, and channel filling by the company ahead of the festive season. In the case of passenger vehicles, we have taken the example of Maruti. That's because it is the largest passenger vehicle maker in India, and also a large part of its portfolio is focused towards the domestic business. Again, for passenger vehicles, they also showed a strong sequential improvement. As you can see in the chart, after washout in April 2020, volumes have been steadily going up. And this improvement was led by lower price hatchbacks, since the preference for personal mobility has gone up. Also, the highly competitive UV segment, that is the utility vehicle segment, is showing encouraging volume trends. As far as the tractors are concerned, we have taken the example of Escorts because it is more or less a pure play on tractors. Well, they continue to show a strong momentum as the rural economy is on a very strong footing currently. Also, one more trend that has been seen in case of tractors is that the retail registrations are higher compared to wholesales. Now, this indicates continuing momentum in the coming months. By retail registrations, what we mean is that the amount of vehicles or units that have been sold by dealership to the consumers directly, whereas wholesales, as we mentioned earlier, are those vehicles which are dispatched by companies to their dealerships. And finally, for the commercial vehicles, we have taken the example of Ashok Leyland, which is again a pure play on the commercial vehicle side in India. CVs, as I said earlier, were already on a slippery ground prior to the pandemic. This is because of lower GDP growth and a sluggish economy that we were having. And the recovery for CVs is yet to be seen. This is because the transporters already have excess capacity, hence the demand is low, and there is also a lot of cautiousness that financiers are observing currently. So friends, hope you liked the video. This was it from my side. Thanks a lot and happy investing.